Good day, traders. Today we're going to be talking about trading in negative risk to reward. Now, first of all, what is a negative risk to reward? A negative risk to reward is trading the inverse of a positive risk to reward, means you're willing to risk more than your reward. And a lot of times, this argument comes up. People are always asking this question. Does trading negative risk to reward work? And whenever I come across this question, the first thing I ask is, can you lose money trading a positive risk to reward? And the answer is yes, because like you all know, 90% of traders lose money. And if 90% of traders, even if that's not a very accurate statistics, but if majority of traders lose money and majority of traders trade a positive risk to reward, so it's very possible that you can make money trading a negative risk to reward. For me, it's not really about you trading a positive risk to reward or negative risk to reward. It doesn't really matter. It's more about the mindset and your approach to trading, how you're willing to go about it, sticking to your strategy and going about it. In my years in the bank, being a trader in the bank, I was able to come across a lot of traders, institutional traders, and I knew a lot of them who traded a negative risk to reward. And most times, they use what we call an RRM, meaning they don't just use a stop loss. So sometimes you meet an institutional trader and you just tell him, oh, I took a trade and I put my stop loss just here. And it's like, why did you put your stop loss? There, you can decide to, look at it manually and close the trade manually if you want, depending on what goes on in the market. So really, it's not about trading a positive or negative risk reward. It's more about the strategy you're trading and what you're trying to do. I've traded a negative risk reward strategy even till today, and it works very fine. If, for example, you're trading a positive risk reward and you're risking $1 to make $2, now if you take 10 trades and you're right 4 times, with that strategy, you would make $8 and you would lose $6. So it means net 8 minus 6 is $2. Your net $2 profit. Now, if you're trading a negative risk reward and you're right, you're willing to risk $2 to win $1 in 10 trades, and you're right 7 times out of 10 and you're wrong 3 times, that's 7 minus 6, so you're positive $1. So you can make money both ways. I've seen a lot of traders who trade a positive risk. If you're trading a positive risk to reward, you can as well lose money. So what that means is you can make money trading negative risk to reward. It's all about the strategy. It doesn't matter. Anybody who tells you, because you go on YouTube and you find out that a lot of people are always saying, oh, you must always risk little to make more and all that. It doesn't. Trading is maths. It's basically probability. Some people take high probability trades and when you're taking those high probability trades, sometimes you might have to give yourself a little bit of cushion when it comes to your stop loss. A lot of professional traders do that. A lot of professional traders don't just use a stop loss and just say, oh, because you see a lot of retail traders go into the market, they take a trade and they just put a stop loss because that's what you're taught to do. Not saying that using a stop loss is bad or you can use a stop loss and make money, but I'm just saying that you mustn't necessarily go down that road. Like a lot of scalpers that I know of don't use stop losses. They close their trades manually, and they use a negative risk reward. So when you see a very high probability trade, you take the trade. You take it. If it goes against you, you still give yourself that cushion because this is a high probability trade. But then another thing you also need to understand is when you're trading a very good risk to reward, like a 1 to 3, 1 to 4, 1 to 5, most times you're always going to be trading a lower probability setup. Now, what does trading a lower probability setup mean? It means the outcome most times you're going to be wrong. So it doesn't mean that you're not going to make money. Like you see a lot of big investors who use that strategy, like George Soros, a lot of guys who trade like that. They just want to be right maybe 2 times, and they know if they're right 2 times, they'll make a lot of money. That's trading a good positive risk reward. But it doesn't also mean that you can't trade a negative risk reward. I would say trading a negative risk reward, if you're more like a short-term trader, you're a scalper, you have a very fast-paced personality, that could work for you. But not saying it doesn't have its disadvantages. It does trading negative risk reward has a lot of disadvantages. And one of the major disadvantages of it is if you're not able to build yourself mentally enough to not panic when trades go against you, then you're going to find yourself really doing really bad because you close those trades early. So if you're trading negative risk reward, you have to be, it's a skill. I won't advise any beginner to go into it. Not saying it's not good, but my years trading in the bank, I traded negative risk reward for a long time, and it wasn't like a big deal. It wasn't like, I wouldn't say stop losses are just, I would say stop loss is more like a very retail type of thing. Everybody just saying put your stop loss here, put your stop loss here when it goes. And you also need to understand that stop losses don't really limit risk. To be honest, what limits your risk is you. You have to know when you go into a trade, you have to know exactly the maximum amount that you're willing to lose. It's not necessarily about putting a stop loss just here or putting a stop loss just here. There are times when you take a trade, like in the FX market, take a trade and it just wipes you up and still goes down in direction. Now, for a trader that trades negative risk reward like me, when I take a trade and it gaps up immediately, I'm still going to wait to watch the market exactly. Now, I see certain things in the market, certain moves, certain patterns that develop, and I know, okay, this trade is not working out, and I close it. But you have to learn to build yourself psychologically to that point where you can handle those drawdowns and still perform with the best composure you can perform with. So trading negative risk reward works, trading a positive risk reward works. Anybody who tells you that positive risk reward only works and negative doesn't work, the person is just probably hasn't traded for a long time or hasn't really been exposed to a bigger market of traders. So basically, you can pick anyone, but I would advise, if you're a beginner trader, I would say it's really better you start up with a positive risk reward, being that you won't have to face those very big drawdowns, and you could still just develop yourself. But then if you have a fast-paced personality like myself, I love to always be in the market. So I could take a lot of small wins and take a big loss. But the big loss, for example, if I take 10 trades and I'm right 8 times, and I get $10 on each, and then I'm wrong once, and then I lose maybe $50 or $40 on, I lose 2 times out, or once or 2 times, let me say 2 times, and on the 2 times I lose 30. That's 60. So it means net I'm still profitable at the end of the day. The most important thing is being profitable, meaning your wins have to be more than your losses. That's the game of trading. So however you find a way to do that, it doesn't matter whether you trade a positive risk reward or a negative risk reward, is your choice. It just depends on your personality and how you go about trading. You can still make money doing it.